But it's Friday. What's going on, my design dude and dudettes? It's John, your stay-at-home designer. And like I said, happy Friday, and what a week we've had. So, first week of September, it has already gotten kind of wild. We've had our ups and downs, I think you could say, as you've seen in the overall market. But nonetheless, we have opened new bullish trades. So I'll show you those, and then we'll kind of talk about current positions, where they're sitting, and we'll take a look at the broad markets too. There's a lot of crazy news going on. So hey, this is what makes a market, though. It's been a lot less boring than it has been, the last few weeks. So I will take that. But to give you the first one here, I actually opened up a bullish position in Tesla as the 1016 expiration there, and then we're looking at a 72% chance of success. But where I was most impressed here was the premium. So was able to soak in a ton of credit for taking on this risk. It was really good. So $166, and basically we're at the strikes of 348 and 344. So at a max loss versus this amount of credit, I'm very willing to take this. Usually we want to collect about a third the width of the strikes. So, if we're doing like a third of 400, I think that comes in at actually, if we were doing a third of 500, I think that puts you at about this. So we collected a really strong premium. Usually it's like 160 something. I think here it's about 130, 120. So not bad. I will take that all day. And if somehow I'm wrong, or the market turns against me, or something bad happens with Tesla, maybe a foreshadow there, uh, you know, uh, it's okay. I'm willing to get paid for the risk on that, and we'll see where it goes. But the next position too is Apple, and same contract dates, a little bit further away from the money, kind of taking in a better chance of success here. Credit was 108, not too bad. 108 is really good, but Tesla ultimately provided the best premium here. Not just from a total absolute value, if you're going 166, 108, but actually when you look at the spread, like for example, this is 5 points wide, and I'm only getting paid 108. This was 4 points wide, and I'm getting paid 166. But the other key things to kind of look at too is sort of how far away from the money you are. And technically speaking, from Apple's perspective, I am further than the current price per share. And so I am, in a way, taking less risk, and I guess I'm getting paid for that. So this is one argument you could almost say, as you contrast these, that the market is very efficient. And generally speaking, it usually is. So not too bad though. But Tesla, when entered, is at 401 a share, and I had seen kind of a turnaround start kicking up. We sort of sank a lot today. I think all the way in the 370s, 380s. And then you started to see kind of this turnaround across the board in the whole market too. Same thing with Apple. Once I started seeing a big recovery, I was willing to take this bet. I put in an order a little higher than that, but I was willing to scale it down and match at entry for 108. So worked out well. We will see where this goes. My target profit, generally speaking, I'm looking at 50%, but for the first couple days, I guess starting next week, I'm going to be targeting less than that. So if I can hit 30, it's ideal. 30 in like 1 or 2 days, I will. That's the best scenario. If it's 20, I will consider it. And if it's 25 within about 2-3 days, I'm happy to. So we'll see where this goes, but you'll definitely get updated as we move along. Now let's kind of look and talk about the markets here. Okay, right now we got the VIX, and this is volatility index. We had talked about this on past videos, where you can kind of see this current line as we go across. This was sort of acting like a support line. It's been resistance in the past, but we kept bumping and touching against this. So really, the thing I found interesting is we just kept kind of dripping up really slowly, but the volatility never broke, about $20 here. So that was interesting. I figured at some point we're bound to like bounce off of that and start picking up. And so you can see, the last about week or two, it started to really take off. And then now this has been interesting to close out the week. So shot up quite a bit yesterday. And then we're almost seeing similar action to, in May, late May. The volatility had shot up, and this is when the market dropped, kind of like a little bit flash crashy, like really quick. And then what's funny is the next day, we had a turnaround, right? Like it dropped, and then you saw a turnaround, and then still more volatility. It kind of shot up again, and then dropped. And then we are looking at something very potentially similar. So this is one of the reasons I'm not feeling as threatened in my bullish trades. I'm definitely not saying like, hey, this is definitely what's going to happen, but I'm telling you, I have some confidence in being a little bit more on the bullish side. Unfortunately, the market isn't exactly a completely free market right now. We've talked at length about sort of the Fed, interest rates, inflation, and generally speaking, there are multiple reasons why the value of dollars and or stocks in a way should be going up. I'm not necessarily talking about the true value of the dollar, in reference to inflation, but I'm just saying with so much money getting pumped in, plus inflation, plus the Fed as a backstop, plus that sort of vote of confidence in a way, it's almost like saying like, hey, I have 2, 3, 4 to 1 odds that the market goes higher than it actually does lower. Now, again, please take this at your own risk. This is not me telling you like this is what you should do, this is what everything does. I'm trying to understand risks as much as I can for my portfolio, and you should always do the same for yours, as well as be consulting a professional, which I am not. This is just for educational purposes only. All right, so let's go to the next one here. Let's check out the S&P, the SPYs here, the SP 500. Okay, so interesting action here. I found this funny that in a way this is almost like a natural support, right? And we have actually printed below it during the day, and then we closed above it. So that does give me some conviction. Volume has picked up significantly in the last 2 days, which is great. But I'm still feeling like this uptrend either continues or we at least trade sideways here. Let's check out this next one here, the Qs. NASDAQ, I think, got hit pretty hard. Yeah, and this one's interesting too. So, check this out. We're basically getting to support here at like the 270 level. And we didn't breach it. We printed just above it, and then we closed well above it. So this kind of, this action is a little bit wild. We're getting volatile, but the way the day ended, the week, we're coming into this week to end, holiday weekend, it's kind of a battle, bulls versus bears, like who's going to win. And in my opinion, this really seems to tell me that we at least continue sideways or up. So again, I feel good about the positions I have because of this reason. Let's check out IWM. This one's always been the one that I felt had the weakest. We actually haven't printed above resistance here. And this is a really strong one too. So you can kind of see we've touched this multiple times, especially in the past in 2019 over here. 2020, touched it like 2 or 3 times. And then, ironically, this year twice too. So, actually 2020 more times. Just kidding. Three times here. Yeah, this is a big deal. So 160 level in IWM is very interesting to me. So with the potential bullishness that we might be seeing in some of the other indexes and their underlying stocks. Maybe IWM can sort of piggyback that and break this, or it might not. And this might allude to the whole K-shaped economy and recovery everyone's talking about. I really don't know. I'm not a wizard. I guess I'm a hindsight 2020 wizard. If you want to do that, talk to me in a year. We'll see where we're at. Okay, now let's kind of check out some other things. So some open positions right now. Adobe. My entry strikes here are 475, and then I'm defined risk at 470. So this is not bad. We actually touched it today. And that bounce put me in a pretty good position. So the nice thing here is that, let's close in. Yeah, buddy. Okay. Yeah, so the nice thing here is we're looking at around that 475 to 470 level to give us a little bit of support. So if the market does continue to rise or move sideways, then my position should do well. I'll close out at that 50% or higher in from here on out, a few days, few weeks from now. Okay, let's check out AMD. So open this one up, I think yesterday or 2 days ago, and that's kind of crazy, but yeah, okay, my strikes here, I'm at 80 and 77.5, and you can see we're somewhat close as well. But we did print above my strike. That's great. So what I need to happen is we need to either stay at this level or go up to 90 or higher. So I'm hoping, actually hope's not a plan, but I am thinking that I have some good opportunities. I have two ways to make money here, whereas if it goes against me, I hit my risk defined pricing and just resize, go for the next reset my probabilities for the next winter. Okay, cool. So Gilead's the next one too, and boy, are we getting close to. So 65 is my short strike. So we cannot breach 65 here, and we're close. We're at 66. But Gilead's been okay. It's not been anything I'm crazy about. When I entered my position, it was out here when it was touching 70, so to 72 I think it was. So for it to be getting a lot closer, that does make it trickier, but like we said, I've got kind of time and probabilities on my side here. Okay, so next one here, I can't wait for Snap. So there's been a lot of talk with TikTok and Walmart and Microsoft and Facebook, all these guys. So basically one of my bets was that Snapchat can make it to the 25, 26 level at some point in the next 40 or 50 days. And what's really great about that is I'd ended up selling a cash secured put. Like, just basically I sold a put saying that we wouldn't breach $20. We never did. And now that put has basically paid for the call that I bought here at the 26 mark, I now have a free call. So it got financed there. And now I'm just not hoping, and now I'm just waiting for this to shoot up. So if we do get to that 26 level sometime soon, the account will be looking very nice. And if we don't, no harm, no foul. I can let it expire worthless, and I actually made like $3 or something on that. So it'll cover my commissions, and it was free. So basically got free time there and a free lotto ticket. All right, so that's pretty interesting. Okay, let's talk about something else that's really important. After hours, something big happened with Tesla. Now, normally it's Elon saying something crazy. It might be some speculators or Tesla tubers, hyperchange, or someone on Reddit, Wall Street Bets, saying something crazy, but that is not the case actually. This time around, it looks like Tesla, for some reason, did not make it into the S&P 500. They were actually excluded from it. They've had 4 quarters of profitability. They've, I guess subjectively done well. They, especially given the issues we've had in 2020. So me personally, with my bias, I am impressed, but I do not understand why they did not make it to the S&P 500. Now, others that were included was Etsy, Catalent, and Teradyne. And from what I know, I think Tesla's market cap is probably like 3 or 4 times bigger than all of these guys combined. So it is weird to me. I suspect we'll find out maybe next week, with business news and the business cycle, whatever reasons they were not included. But that does potentially spell more volatility for Tesla. Either way, that maybe means something will be happening with my new trade. But I also do happen to have a couple of shares of Tesla in a kind of lower, I guess you'll call it lower risk retirement account. And so honestly, if it goes lower, I'm probably pretty willing to buy shares in that. So I'll update if that's the case. But yeah, I'm surprised. I really expected, a few things I was thinking is with these drops, a lot of S&P 500 tracking funds would likely start buying up Tesla, because they'd get, a relatively good value in it. And maybe that's not the case anymore. And now we might see some selling. I definitely foresee short interest picking up at some point here with them. And that's just kind of the way this stock goes. So we'll see. But I'm curious what your thoughts are. What do you think about Tesla, Apple, basically all the tech stocks that dropped, and they seem to have a recovery now. But either way, it's time to enjoy the weekend. I'm going to go out and do a little fishing, some social distant fishing. And no worries, it's catch and release. I'm not too interested in eating any of the fish around here. But I appreciate you stopping by, my dude and dudettes. You enjoy your weekend. And let's democratize our future and our finances together. All right. You take it easy. Thank you. I'll see you on the next one. Bye-bye.